Good morning, guys. Happy Friday. Hopefully you're all doing well. Hopefully if you watched the stream yesterday, you took the advice that Max gave. So shout out there. Gave you guys a solid clip there where he had basically said that you cannot really look for the SFP again at the lows because all those traders have been taken out. There's nothing there, meaning what? Probably going to dump through the area. So that was a solid shout. It was something that came on stream live in the moment. So it was really cool. Otherwise, we're going to do the normal today. We're going to talk Bitcoin areas of inflection, talk about this bounce and see what we think about. Is this the low? Is this going to go a little bit lower potentially? And then work our way through the analysis to the DXY. Max, anything you want to add before I jump into the charts and do my thing?
All good, my mate. All good.
Everybody, make sure you comment and you let Max know how good his hair looks this morning. He woke up and decided to do it for you. I think he looks great, like a little miniature anchor man, right? So when he grows up, that's what he wants to be, is what I heard, is he wants to be an anchor man. So
all right, Ron Burgundy's always been my idol. It's not you, Magic. It's been Ron Burgundy since day one.
It's been, can't blame you there at all. All right, guys. So very simple. You've got your breakdown. Let me get rid of the weekly range here. You can see that we're held up on this one moving average. It is the yearly VWAP. If you follow me on the old Twitter, I went ahead and posted it. It's something I made people aware of in the group as well as we were hitting it, just to let them know, hey, this is going to be a pit stop area for us. You are looking at this as support, and it's just above where we've been kind of isolating anyway. Now, you do have some weekly NPOCs, daily NPOCs, some quarterly levels all the way down to here. And I believe that you have a bi-monthly level here as well. Yeah, there you go. It's also your tri-yearly pivot. So again, just to reiterate on in terms of importance, this little box right here, which you've front ran as of now, is very important. If you wanted to be a little bit more or less conservative, I guess, more aggressive with where you're identifying support, we've shown you as well that you could very easily, just as you could identify this as support right here and just extend it over, you could do the very same thing right here. You could just come down and say that this is the support area you're looking for. And you can see that you haven't really hit either one of them. I think a lot of people are looking at this local high here and expecting that to hold up as support, and it very well could. So if you're looking at this as a buy the dip opportunity, which I still think that the rally is fine until it isn't, right? So you guys know that my overall targets are up here still at 26,724. It doesn't just get there in one shot. So you do have to be cautious. Now, we're going to talk about some scenarios where we need to be cautious of and why we think that lower prices, or at least myself, I think that lower prices are still coming on this. Now, does that mean drastically lower? Not necessarily. So keep that in mind, but we're definitely going to run through invalidations as we always do, meaning that we're going to give you guys some actionable areas to work off of. So triggers, right? So first things first, into the yearly VWAP, if we were to get a bounce from this region, what would solidify this bounce as being good? Meaning that probably not going to see lower prices. We first need to work that out in our mind. For me, I was already on the chart. I was looking at a couple different things. So straight away, the most relevant price action is going to be our developing monthly and our developing weekly, right? That's what we want to take a look at here. And main reason being is we just need to see where do things line up. You can see the September high here, this 22,810 level. I'm never going to not say this level on stream, apparently. Comes in right around the points of control of both February and this past week. So again, very relevant level still to have, even though we're far away from it right now. But just looking at your local pull, right, low to high, you can see that the 6M1 at 22,407 and your previous week low at 22,368 are going to be areas of interest, mainly because that was just such a key area for us to hold the entire time. And these areas aren't dynamic by any means. They are already set in stone. They're not going to change. So that's something that right away we like that. This is a constant on our chart, and it's very clear just to the eye that this was such important support going into it. So we already know, just bias alone, we know we need to get back above probably 22,368 to 407. Go out to the weekly time frame just to see if anything is different. I'm going to get rid of this yearly VWAP. And you can see that the local wicks are down here. If you wanted to move this weekly low over to this one here at 22,333 from the 22,368, you could. It's a $30 difference. I would not blame you one bit. It just increases your box by, what is that, $67, $74 is what this little window of price would be then from right here to here. Okay, so that's all this would be, is just like a little window of resistance. So we just need to see this box reclaimed, and we know why. It's just important from a market structure standpoint that this area of the chart is support again. Okay, so that's all we're doing. If we're to see a push back into it, we know it's the weekly value area low, the developing weekly value area low. This is our most local high, just high to low. You can see that this is also going to be your local gold pocket. So not surprising at all that that's coming in there. So if we did get a push up into that region, I think that's a very scalpable and tradable level for anyone that's interested in it. It's just the reclaim of this level. I think at that point, September high is probably coming, but I'm starting to then look towards 23,245, 23,745 at the previous week open, maybe even this prior weekly swing fail high right here around 23,967.50. That's only if this level is flipped. And at that point, I'm like, yeah, this was definitely the dip. So 22,300 to 400, this little zone here is going to be absolutely clutch if you're working off of any kind of invalidation system. So to the downside, I don't think that this is likely the low, but that doesn't mean it can't be. And I'm okay if it's not. I'm still long from 16.6. I haven't closed any of that. Main reason being is as we started merging data, or I did last night, I started looking through some of the higher time frame charts, and I like to use ATAS for that. So you can see that we closed out the single print on ATAS to the T. Really, really nice right here. But your TPO and your value area low, right? So that's what I'm looking for on a merged range basis, is coming in around 21,222 and 21,157. That gets us into these weekly naked point of control and close to this daily down here and kind of closer to this little zone. So to me, I'm still kind of thinking that we may have that leg down. Now, that doesn't mean you can't take trades off of this region. It's just understand that the probability, from a range standpoint, that this is the low is not as likely as one might think. If you look at the January range, you can see that we're nowhere near the January value area low. We are outside of the February. And then if we were just to merge everything together, since we only have about a month and a half worth of data, we can take a look. Let's make sure that's extended. Yeah, again, value area low of this coming in very much in line with ATAS, that we'd be looking for this weekly naked point of control and value area low at a minimum, right around 21,100 to 200 still, just to see this range rotate. So you're just kind of hung up on this little high volume node right here. It's not even high volume, it's just a node. But if you lose this area, I would be expecting this drop into this zone. So for me, that's still the area of interest. It's just an SR flip, that's all. And even if you were to take an even higher time frame look at it, right? Like that's something that you'll catch me doing quite often. And I'll move this over here to do so. I did share it in the group, so I may just pull it up on there because it does take me a little bit to merge this. But I'd be merging this back all the way to our dump from basically back in June out of the 30K zone when we formed this larger 25K area. Because that's really what it's been, is it's all been one giant range with a couple deviations at this point. There we go. That's the 4-hour candle I needed. And let's go ahead and have a peek. If I can get, there we go. So when looking at it like this, and you're basically merging all the data all the way back, as you can see here, you can see that the highest volume area is still 20,000, which is right around where our gap is. So no matter how you merge these ranges based on time or based on market structure, you are looking at possibly coming back to either the value area low or the POC still. So until 22.4 is reclaimed, I have to think that that's going to be the landing zone for price. As price doesn't move, straight up and down in linear fashion, it does kind of do all kinds of stuff. So I don't diddle in the middle too much. I've taken a couple scalp trades off of the yearly VWAP, but that's really it. Not doing anything too crazy with it. I'm just going to continue to hold my swing longs. And if I'm given the opportunity at a major inflection zone somewhere near that, 20 to 21,000 area, this cluster of price, I'm very interested in the price action. The only thing you don't want to see is if we start losing this area of the chart right here. And I brought this up weeks ago with guys in the group, just so everybody's prepared. You'll notice that we didn't spend a ton of time right here. We did spend a good amount. Again, right here, a little bit of time, very little time, right? So this zone has actually not been something that's been historically been like massive support, because you can see what happens. Generally, you kind of mess around here and then down it goes, right? Right here, barely on the support before going up. So to me, if you lose this area of the chart on anything under a swing fail, like down to this like 20K region, you run the risk of running it back all the way to this area of the chart, the local gold pocket and the overall value area low. So you do have to be aware of that. And the most time that we've spent in any area on the chart is 19,150. So this is your TPO point of control for the entire range. We've spent more time at this level than any other level on the chart, going all the way back to June of last year. So like the last 6 months, well, 8 months now. And that would be a relevant stopping area for me if and only if this area is reached and does not end up being support, which you can see it's gotten a lot of action. It's been a very important inflection point. However, we're not spending a lot of time inside of it. Actually, we usually just come to it and then up we go or down we go, right? Like it's fast move up, fast move down. So if you lose this area, it's by and large been a fast move down, right? Anytime you lose this area, where do we go? Range low. So you really want to be hanging on to the area below us. Maybe we don't reach it. Maybe this is all front run, which could very well happen. However, until 22.4 is reclaimed, for me, that's what I'm looking for. I'm not willing to gamble, because anyone that says this is the low and it can't go any lower, they're just guessing. Just like, I'm hypothesizing about lower prices. They're doing the exact same thing. I just think that the odds say that we're likely to come down a little bit lower before. Doesn't mean you can't buy if you're DCAing, like let's say you're a spot buyer. Do you care if you bought 21.7 or 21.2? I mean, probably not too much, on a spot buy. But if you're trading with any kind of size, or you are actually just trading in general, you're usually looking for optimal entries. And if you don't get one, what do? Well, we don't normally trade. We sit it out. So I would be keeping an eye on this local high right here. Obviously, it's what our current support is at 21,647. Also, yearly VWAP there. You lose that stuff, guys, and, well, we're probably making our way into this box, right? And we just have to remember that the gap is down here as well. So that is all I'd be watching. So very, very simple. Got to have 22.4. Otherwise, trade this as a little mini range for what it is. I'm not personally going to be doing too much of it, though. I'll be exiting those quite a bit. So let's see to the chat real quick before I hop on to DXY. OC is 6. Sorry to hear that. H bar is moving. Good morning. Good morning. Max's hair does look amazing. Chicks won't resist. It's just what he needs is more girls. Trump would be jealous of that hair. Chuck Norris sends his approval. That's a very American compliment. So you should like that. We got 20 likes already. Thank you, guys. Do I think bottom is in? In terms of the overall bottom. So I am probably like the worst person to ask about this, because I don't get into too much of like the bottom is in or not in. I'll be straight up with you. I don't care if it's in or not. I'm going to trade it either way. I actually don't believe 100% certain that the bottom is in. However, I did take a long at 16 and I said, I'm not closing this long. So the reason being is you run the risk of the bottom actually being in. So it's a 50-50 in my opinion. It very well could be. I'm not trying to predict if the bottom's in or go on the record and say, oh, I called the bottom. I'm trying to trade this and make the most money. And so that's what I did, is I took the long because that's what you do. It was the best trade on the table. So that's what I'm trying to spread out there is, make good decisions. Nobody cares if you're right. Being right doesn't pay your bills, right? The only thing that pays your bills is how you trade. So, my opinions on if the bottom are in or not are irrelevant is how I look at it. I'm just some guy on the internet anyway. I think that is it. I'm going to look at the DXY real quick.
Is that all you are, Magic?
Just some guy on the internet. Yeah, I'm just some dude on the internet, man. Like, just like you. You're just some dude on the internet. You just live in a different part of the world. Just a random guy. I'm just a normal dude. Normal dude with a bad hairline and a great beard, right?
Yeah, you caused
so we talked
yourself,
about, huh?
You caused that hairline yourself.
Oh, did I? Everyone in my family and all the men in my family are going bald. So being born from the mother's genetics, that's what got me. That said, we were looking at the DXY. This was the swing fail we were on about right here. So this is your daily time frame swing fail from the prior range. You can see that it was resistance, 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 resistance. Now it's turned to support. So we are at the 2016 and 17 highs. Again, we've talked about these levels numerous times at this point. You know, we can take this and we can extend it to the left as I've done before. And now we can go out to like a higher time frame and take a look, and you can see exactly how important this region of the chart has been for this asset, right? So support, resistance, support. So you can see why this is such a major inflection area on the chart. It's also your local gold pocket. Okay, so if price starts reclaiming about 103.911 or just this, you know, gold pocket, however you want to look at it, this zone of support, if it starts flipping the last daily, you know, high right here, which was 103.765, right? Anywhere in that region, I think you're going to 104.775 and probably going to come up and try to challenge this high here into like 105.788. And then the elephant in the room is, how high can this bounce go? You know, is it a full-on reversal? I actually don't think so. I think the top is likely in for the DXY, which would aid in the conversation of saying, is the bottom in? If the top is in for the DXY, the bottom being in for Bitcoin seems more likely, doesn't it? So we can kind of start piecing it together there. But if you start reclaiming, you know, anything above 104.775, which is getting ahead of ourselves because we have found resistance here, but you know, it's consolidating underneath it. It's now back tested old support and giving you a move up. Can we come and fill in the 6M1 and the Q1? These are just pivots. They hit at a certain rate though, and we know that they become targets, and that would create quite a move up, which would generate a really big move down for Bitcoin and the SPX. Now the SPX is coming into a really important fib time, the Valentine's Day fib time this next week. These are all the major pivot points that I have for this asset thus far. Get rid of that. And you can see this is your first one, right? Second one is down here, nice low. This one wasn't as clean, missed the overall high, but did get this local high. And then we had this one, which was kind of off. It was pretty close to the local high here, but front run by a few days. You have the gold pocket or the 618 coming in here on the 14th. So I am curious to see what kind of an inflection point we get, whether it's a move through resistance or a move down, I guess. And if it's a move down, we would expect Bitcoin and other risk on assets to probably be doing the same thing. And that would also coincide with the DXY probably trying to come up and fill in some of these averages, right? So that's all it would be doing. But I do think that would be a lower high on the DXY, not rhyming or anything. I don't think that well, I guess these were my initial targets, but I think that these are pretty fulfilled. I don't see this ripping back up to here unless the old unless the old Jerome Powell and company come out and say they're going to raise rates to 10%, which we both know is not happening. So yeah, that's it for Bitcoin, DXY, SPX. I'm not really charting too much. You can see it's coming back to its 12M1 here, add a key fib date. So I would like to find support and then see if we can't push to this overall target. For me is the gold pocket. That's all because we have this guy, right? So you can see that you have your X and your B leg right here. Now it's being turned into potential support. So you see how we've come up above the level for the first time in a long time. Now we're finding support on it. So we want to find that support and get that push into the next target, which is the gold pocket with the yearly pivot above it from last year. So that would be the cleanest way to look at it, in my opinion. The only other thing I'm going to touch on is Tesla. I see a lot of people like sharing this now, but we nailed Tesla like to the bottom T, like confident before anyone was posting it. Had a nice harmonic, right? Sweep of the lows on the weekly time frame, and then you reclaimed this key box here and your regression from 2022. And so far, it's been very clean from the Q1 to the X pivot, which is just that first pivot of the structure, right? So we're monitoring this as a key pivot to get above. And if you get above this, what do we expect? We expect to go to the yearly pivot because it's in there, but also you have a B leg up at 233. So I would be looking for this to potentially fulfill the remaining targets of this and head towards this B pivot up here. If it got really out of hand, let's say that markets got really risk on and think the bottom was technically in for everything, including tech, you have an NPOC all the way up at 298 and a gold pocket there. I'm not looking for that right now. I don't think that's the most likely play, but I do think that if you were involved in Tesla or you were just keeping up with what we were talking about or my Twitter, you got a really nice trade on your hands. So that's a really great trade for traditional markets. So I'm all done. Otherwise, I'll just keep going about stuff. And we're going to talk altcoins tonight. So, yeah. So Max, if you want to take over, feel free.
I was having a little laugh off screen, thinking about how you introduce yourself to people. Just like, hi, I'm Magic, and I'm just some guy on the internet. To crack me right up, mate.
That's how I do it, man.
Girls must dig it. Anyway, we are in the. I need to sort this out. I cannot see them with this bootleg screen I've got. Okay, so yeah, we are in the single prints. Do I think we're going to get closing them? I do. Reason being is, well, the current little low that we've got, yes, it was an SFP. Was it the best? It was okay, to be fair. If you look at it here, you can see that you had the delta. It was somewhat positions changing hands. And then you can see the buyback that you had. You did have buyers coming in. You've got buying imbalances in the candle as you effectively made the SFP. And then as you got above the VWAP, more buyers were entering. Ran up $100, the one possible trade one could have taken here. Looking at this right now, though, with that being the low, I think with the move that we had, being as considerable in, I don't think that we're going to just get that as the low. So what I'm really thinking of is the volume spike that you want. Looking at it, 20 million for the low that we've had. I just don't think it's going to be the one. I do expect us to come down a bit lower. But right now, you have found buyers. They came in around the golden pocket. So, it's nice to see, I guess, them actually using some logic, buying in this region. But price isn't really doing anything. And if we go over, I think the TPO chart's more important today, to be honest with you. So if I go over to the TPO chart, we have got the resistance on this side where we've got another single print here. Now, I've drawn the box because this is how I like to do single prints. Theoretically, this would be a single print and that mini one there would be a single print. But when the candles simply just cross over, I just think it's worth making that the whole single print. So this is the resistance for me that I'm looking at, up at 22,100. For the guy that asked, I think it was a latter. A single print is, so you don't necessarily have to use a TPO chart, but it just highlights it, makes it easier. Magic's one that he uses on ATAS. I dislike that because I do think it makes it a little bit ugly. I quite like how this separates it. And basically, for a single print to be formed, you're going to interject?
I was just going to say it is uglier, but I like ATS for merging ranges more so.
Meh. Anyway, the way that a single print is formed is when you have effectively a 130-minute candle pass through an area and in a session in a day, and price not linger around there. So that's the simplest way to put it. And it effectively creates an inefficiency on the chart. You'll notice it in the volume. But the candles this is the way that it tracks it, and it's an easy way to spot it. And basically what you can expect is price, if it comes up to it, reject to that level, and then if it breaks it, oftentimes it'll fill it. So this for me is the current resistance that I'm looking at. And it's a nice region as well because it comes in at the lows that were made for this range that we've effectively had. So if you don't claim that region on the charts, no upside. If you claim it, okay, you're back on. But it's it's an important level now to get above, and it comes in with the top of the single print. So could reject there for sure, but that little box now is the resistance. And with us being in this single print that we're in, I expect it to come a little bit lower. I don't like predicting where it's going to go, but I'm not expecting this to be the low that's made. I expect, so what I was doing is I was looking at the 4 hour. So let me get off all of these things and go to the 4 hour. And yeah, I quite like the 0.382 Magic. I was doing the thing where I pull the golden pocket so it's at a specific low. I quite like the, which one was it? It was this one where it's at 20,500. I quite like that region.
Yeah, 20,434 is that bounce zone. Yeah.
But if we look on the 4 hour, so I'm on the 4 hour now, and let me hide this and that. And we look at the specific highs and the specific lows on the charts that are, do you use the 30-minute for your entries? Never. I don't think I've ever used 30 minutes. I use the 5 minutes on the footprint chart.
I use the 5 mil volume. I don't use a minute chart.
Yeah, 5 minute or 1 mil. So you really have to go to a much lower time frame to get good entries, because if you're waiting for a 30-minute candle,
doesn't mean you can't get a good entry. It just depends on what kind of a trader you are. If you're in your level of comfort, going to like a 5-minute chart or a 5 mil chart, which is even worse because those candles are filling out like if it's real volatile, they're filling out in 0 seconds. Yeah, they can come in 0 seconds. So
the question that you have to say to yourself, I don't know how to say that last bit, Crypto Shinobi, great name. The thing you have to ask yourself is what's your plan? So when I take a trade, normally I'm TPing within $100. So if I'm waiting for a 30-minute candle and my first TP is in 100, it's happened in that 30-minute candle. So you can't really wait. So lower time frames, wait to see your entry, and then take the shot. I think there was another question.
Should specify that this is a day trading type conversation he's at. Max is much more of a scalper than a swing trader. So he gets in and out, usually
normally very much out very quickly.
Yeah. So in terms of what you're asking, a little more context would be helpful. Like you could probably have a strategy that gets you an entry on a 30-minute chart. It's just that's probably more of an intraday swing trading strategy than like a day trading strategy, most likely.
Yeah, you've got to have a plan to what you want to do.
Yeah, but I mean, you could use that. I used to use the hourly, to be upfront with you. I used to use the hourly for swing trades. I would look for like hourly swing fails, 4-hour swing fails. And for that, you could dive
in. They tend to be the better ones.
You could dive into You could dive in like a 30-minute chart to like maybe clean that up a little bit and like try to find that entry. That could work. It just depends on how you're doing it.
For the guy that asked what's a front run, so effectively a front run is when you have a specific level, price comes very close to it, doesn't hit it, and then moves away. That's a front run. And then the 6M1.
That's just a pivot. Yeah. So 6M1's is just a time frame for a pivot. And I didn't touch on it, but the monthly pivot is down there. I know I've brought it up before, but he's got it on his chart. And it's something that, well, again, another statistical target. So that's why when we say we're looking for a little bit lower still, there's just things that point to it. That doesn't mean it has to happen. It can happen where it doesn't meet those targets. But statistically speaking, it more often than not is going to. So
I mean, just to zoom back and you can look at every other month that we've had recently, you've been hitting them. So chances are you hit it. So also there was one more. No, there wasn't one more question. So what I was going to go over is the 4-hourly and why I was kind of looking at this a minute ago. And when you look at specific highs and lows, what do you see on the 4-hourly? Generally, they have very large wicks. And this was the low that I hated. Then the low it was made had a very large wick, large wick. I can keep on repeating. Typically, when you have a specific high and a low, you see a large wick, and that just insinuates, a lot of pressure on one side of the market. So here, a lot of selling pressure. Let's scroll to the bottom. This one here, a lot of buying pressure. And granted, this isn't the best. I hated these lows at the bottom, but it is what it is. Can't always get what you want. But yeah, big wick here. And what we've got right now just is not, to me, signaling that the low is in, jump in and 100 exit. I just can't see it right now. Nothing really is telling me to do so. So, take that for what you will, Alex. It is what it is. Not really too much to go over. We also are getting bearish divergence. I just spotted as of right now. So that basically means that the people that are buying in this region, trying to aggressively buying, trying to push the price up, are effectively not doing as well as a job as they were over here because someone is signing a limit order. So another thing to go in the favor of you expect more downside. So yeah, that's pretty much it for me. Magic is rather a quick one. I don't know if you want me to go over anything else. The drop was pretty self-explanatory, just wrecking a load of people.
Yeah. Well, good amount of liquidations there. If you want to cover that wick one more time. So yesterday, guys, I was watching a show, and I'm not going to name any names, but I was listening to the comments, and they were saying things like, oh, none of these guys know anything. There's no way they can tell if the support's going to hold. And if you watch yesterday's episode, as it was coming into that support, we were going over the order flow, and Max just very candidly told you guys, he's like, I would not look to trade this as an SFP level again. Those buyers have been taken out. There's nothing there anymore. Basically indicating that I'm not buying that support again. Like, we're not looking for that trade anymore. That trade is played out. Letting you know that if you were to not reclaim, in this case, it looks like the VWAP, obviously, or any kind of material, support, then coming back to that's probably going to lead to a breakdown. And we all know what was below those lows. It was tons of stops, tons of liquidations took place. So it can be done. Order flow isn't the easiest thing to grasp right away, but once you do, can really give you an edge in the market. And kind of, it doesn't tell you what's going to happen next, but you get a pretty good sense of, okay, if we do come back to this level, unless these mystery buyers just show up out of nowhere, this is not going to be good support, or this might not be good resistance.
Yeah, I would say it's very good for short term and mid-term trading. I think that's why I always like to say that, or think rather, that I can kind of tell where the price is going to go in the next like half an hour to a bit longer if we're doing LRA. But other than that, it's I do like it. I do enjoy it. So making me stroking my ego a bit here, man. Yeah. So basically, when we had this drop here, effectively what we were looking at is throughout the day, ignoring the minor little drops that you had here, it was mainly buyers coming into the market. And it was especially as you took above the VWAP, you had plenty of buyers coming in. They failed to really do anything with price. You then had an SFP. And throughout the day, all these buyers that have been coming in, as soon as you have a move like this and they see a specific low, what do people think? What do you think as a trader yourself? Because this is the thing that you really have to think about. What you're thinking of is what probably thousands of other traders are thinking the same. So when you see a specific low like this, you think, me included, I'm going to move my stop up, might as well lock in some profits. No point having my stop loss down here, might as well put it here. Okay, so that happens. So all the traders that have entered in this region of the charts move their stops up. And when looking for an SFP, you want one of two things. You want trapped traders, which is effectively shorts coming in at the low to then get above and trap, or you want positions changing hands. For positions changing hands, you have to have positions that are ready to be taken, and ideally, in ideal form, normally it comes within that day, because if you're looking at positions from back here on the charts, they've been given chance to get out of their trades and have most likely been stopped out at an earlier day. So you want to see these traders not still be in the market holding on for dear life, be like, I'm not selling, and then forced to sell and someone else take their position and price move up. So when we were looking here yesterday at this point in the chart, you had this huge wick down, and effectively what it did was wipe out all of the traders that had entered that day and then some. So all the longs that had entered were taken out in this trade. So it negates the fact of positions changing hands, because there's no positions to change hands. Granted, you got the liquidations here and what have you, but they're from other, they're not localized traders that you can really pinpoint and work on. So there's no really point stressing about them too much. Could have still happened, but didn't. But then, the other thing I would like to just say is buying into the VWAP. We were laughing about this on stream yesterday. I swear to God, it happens time and time again, and these people get wrecked. So hopefully you guys
listen to multiple streams in a row, man. Every stream we've been on this week, almost, we've been joking about it. Like the other day, it was like 4.3 million into the VWAP, and we were like, "What is this guy doing?"
Let's have a look. See if we've got any today as well. We've had some, but not as I think that guy's probably wrecked at this point.
Oh, dude, he's got to be very unhappy with himself. Yeah,
but I don't think it's coming down now more now.
What's that?
It's coming down more now. It's going to take the low. So there we go.
Nice. Yeah, in terms of a lotto, how I trade, so I do combine a lot of different things. So I do use pivot points, but the way I use pivots are a little bit different than most people. Reason being is I started using them in 2019 because I was trading with this guy, Newt, at the time, and he was a big pivot point guy. I think it's just because it was easy for individual traders. And look at that. Look at that. What did we just tell you guys? Anyways. They do matter because they're actually just averages of session price. So it's literally just an average. So it's important to understand why and how you're going to use that average. And then I combine things with time. I standardize my process. So I have it's not a strategy. It's more of a charting system to give me the most logical targets. And then it's up to me to find my entry trigger, which is usually order flow, like what Max is doing right now. So that's how I do it. I like to build a system around it so that there are legs, so that if I want to take a trade, I know the most probable pivot points or turnaround points in the market, the most probable targets for rotations, and it gives me pretty accurate zones. And I've been doing this for several years, and it's just been really good for me. So yeah, time is a big one. I standardize things by time, and that really helps because then I don't have constant variables. You're not guessing as much. You can always go back and say, okay, I've got my monthly, my weekly, my daily. I track the 2 month, I track 60-day cycles, quarterly, 6 month, yearly. I track bi-yearly, every 2 years, 3-year cycles, all kinds of stuff. Yeah.
I'm not really seeing a delta switch up there. It's happened a little bit on the 1 mil, but there's not other high percentages coming in now.
5 mil, the 5 mil's got some, but no real buying imbalances.
Yeah, that's the thing. You've not had a single one. And the low, from a footprint standpoint, is not the best because you'd want to see the sellers exhausted, and effectively they've not been there. So what you'd expect to see sellers exhausted on the footprint chart would be zeros here. And the reason that would be is because it takes as soon as there's no sellers, so if someone comes to buy in limit order, what they would effectively have to do is the price would jump up to then find that selling limit order. So you'd get the zeros at the bottom, and it's typically caused by liquidations and stop losses. So with looking at this here, it's effectively not the best low from a footprint standpoint, but it doesn't mean this can't be the low. But looking at the volume, and the volume's great on that. That could certainly be the low if we were to regain some ground. That is a huge amount of volume. Open interest in Delta don't really tell you too much there. It's not exactly positions changing hands. What you'd really want to see is, you're getting some buyers coming in now.
I would say you just had 1.7 mil jump in.
You are getting some buyers coming in now. So you'd want these to effectively continue, but with more strength. You don't want it to linger around here, because if it lingers around here, the psychology comes back in. If you buy in and you're at the same level and price is lingering there, you get on edge. And what does price often do 9 times out of 10 when that's the case? It comes and taps your stop loss. So, be aware of it. But we have just effectively SFP'd the low from earlier.
You are.
So there is a setup there, and that's not a bad stop loss. Effectively 100 was just under a percentage. But I would personally wait for buying imbalances to come through on this candle. And this is why I prefer time over volume for buying imbalances, because it's set, whereas you can get a buying imbalance on a mad one on the volume chart.
You've got 2.4 mil in that last candle.
Yeah, but if you're looking at it on the 5 mil, you've effectively got 6 million on the 5 minute. You've effectively got 6 million on the opposing side of that.
Well, we'll see. But to me, it just looks like it's going to go. It just looks like it's going to go retest the VWAP to me. That's all it looks like. But
so Alto, how do you locate the pivot? You locate the pivot by clicking indicators and typing in
pivot point standard. Pivot point standard.
Voila.
Yeah, there you go. That's your pivot point.
Oh my God.
Yeah, you have to adjust it. If you double click it or go to your settings, you can turn some of I don't use the S and R, which are support and resistance. Those are calculated based on fibs, depending on how you do it. Traditional is not, but Fibonacci is the one I use because it doesn't change the actual pivot point. The pivot point itself is just a calculation of the high, low, close divided by 3. So it's the average of price from that session, whatever one you're looking at, whether it's a weekly, monthly, daily, whatever it is. And that's what I care most about. I don't care about the SR levels because they're not as. Then you're looking to trade them as support and resistance and not use them as generic targets, which is what I like to do. I like to know how often do we hit them, and when we do hit them, is this something that's I can trade? Can I spot the reversal when price starts making its way to that pivot, and can I use that? These candles right here, I stack crypto low key. He's asking about candles. Did you have the PVAs on or something?
Which ones do you want? Which ones? I've got PVAs on this one, which are the multicolored ones. They're great. They're PVA candles. I like the indicator that is called PPA candles and volume. It effectively is a highlighter for specific volume. When you get a high volume, you'll get a solid red candle. They're really great. You normally get them at highs, lows, and very important places on the charts.
Yeah.
We have educational content out on them.
Yeah, we do. I'll be honest with you guys. If you go to leadingcrypto.io, you'll see that we cover all this stuff like in depth because it takes hours to learn and put this
The
stuff
one with volume.
This
Yeah,
right
so
here,
this
is
every candle is effectively $1 million, and I believe it to be $1 million market order. I don't think it counts limit orders. So this is $1 million, market order. So if you were to set a limit order, you're not going to come into this. But if you were to set a market buy, effectively this counts. Every single candle is $1 million, at market. And what it enables you to do is take time aspect out of the trading a little bit, and you can really get some cool things when you deep dive into it. Like for example, here you can see in this move down, really negative delta, and then when we stall, you always get a delta switch up. So that's one thing you can always look at when you're using order flow. You get a delta switch up. Sorry, I'm in the way here, and you are magic. God. You get a delta switch up, and it color codes it so easily, so you can you don't not having to like look at the figures or anything. Oh, there you go, way better. And you can see, so you're getting the really negative percentages, color coded all red, and then you start to see a bit of a storm, the final little leg down, but then you start to see green, and then if you're building statistics on these type of things, you can look at this type of thing and say, okay, when we come into a specific level XYZ, and then you get a high percentage candle. I prefer 75% and over personally, but you can always, there's no point forgetting about the color gradients. Like, we've got 63% there. If you'd have bought that, did you get $100? You effectively did, but you had to be really fast because these are coming in at 5 seconds. So you've got to have fingers on the triggers. It's why ATS is good for one thing, and that's that you can have hotkeys to buy and sell. So you can buy in there and have $100 take profit set automatically as soon as you buy. So you don't even have to then scramble to take profits. You just click, it's there, bish, bash, bosh, and then you just move your stop loss to entry effectively. And then if you get stopped out, so be it.
Oh, ATS is good for more than one thing. I don't like that. I like ATS a lot. I use it more than I use EXO sometimes, but the order flow is much. That's such
while you're teaching about it, don't talk the talk.
I don't like teaching that one. You know why? Because it's that platform. It's a horrible user interface. It's not very friendly. So it would be a nightmare. I know it would be a nightmare. But yeah, if I could, I guess I could build templates for it and just like, all right, just use these. I sent T-Bone one of my templates I use for merging ranges because he got it to work finally. But
Stack Crypto didn't even want the volume chart one. He wanted the footprint chart.
Okay.
So this is the footprint chart. So effectively what this does is it allows you to deep dive into specific candles. So if you look at the normal chart on the 5 minute, let's go and have a look. Just for like a visual example, just here, it looks pretty plain. What does it tell you? Okay, we've SFP'd and got the close. Okay, great. Does it give you any more data? No. Whereas what you can do with footprint charts is you can go in and effectively dissect the candle. That's the best way of explaining it. You're effectively going in, zooming in, and looking at what is actually occurring in there. On the left-hand side, you've got selling taking place. And so this is this left column here. This is all people market shorts that have entered. This on the right-hand side, this is market buys. It's crisscrossed. So, a short here affects a long here, and a long here affects a short there. So it's like zigzagged effectively.
Yep.
And then these black boxes here are pretty much, they're called imbalances. It just signals strong, regions where this side of the chart dwarfs this side of the chart effectively. And it can give you, I really like it for entry triggers. I know Magic does too. And that's what we try and teach in the group, when you're looking for that delta switch up in specific areas and you get a selling or buying imbalance, it shows you the strength in the charts to then give you the comfort to then take XYZ trade. So using this type of information, it really allows you to go through, the current setups that you've got. If you're taking a trading setup and let's say it's got a 60% win rate, that's good. Yeah, it's very good. But then if you use something like this and you go back and analyze all the trades that you've taken and say, okay, I've noticed that every winning trade has this XYZ pattern. Maybe I should only take the ones with that pattern and then see your winning rate. It's going to improve it. And then you're going to be taking less trades, but your winning rate is going to go higher. So that's the benefit of it. And then I've gone too far into it to a point where I like to use it for my analysis a little bit, where I pretty much only use it for my analysis, where I'm just getting...
That's more open interest, though.
Yeah, it's open interest.
Which I think is useful. I mean, you get way more into it than I ever did. And I think that's cool. I mean, you're good at it, obviously. So how do I get footprint charts? exocharts.com. We have no affiliation. They don't do any like sponsored links. So they're usually about $30 a month or so to do that. But comparatively speaking to what it used to cost to get information like this, it is very cheap. But just know that it is a learning curve. So if you get on there, I would definitely seek out education, because it's very tough to just kind of get in there and like understand right away. It's like anything. It takes time to learn. Alato asks, is it hard to learn the system that I'm using now? Not really. To be honest with you, the videos that we have go through why we chose specific, tools to use, and how we use them basically, and how we expect you to build charts. That is the main thing. Is I do try to standardize it a little bit. Now, some people in the group, they do their own thing. I just kind of let that happen. But when you first get in there, the first thing that we have you do is sit down and start like lesson 1. All right, this is how I just find a horizontal level. This is why it's important. This is how I build a chart like that. And then from there, it's okay, how do I find ranges? How am I going to use time involved in this? And, what can I tell from the chart while I'm doing this? And there's a lot to it in terms of like tool usage, but over time you start removing some of them it's not always on your chart. You don't need it on there to find that, the information that you're looking for, in the sense that you can go through the ranges, you can go through the pivots, you can go through the horizontals, you can go through the fibs, and you can go, okay, this is the most likely targets, where the most confluence is. This is where I want to take a trade. And when you get there, we use order flow to find our entry. So if we get to a level and everyone's going, oh, how did you know it was going to reverse there? Well, I didn't. It was a really good level that we identified. You stay patient. And when you get to that level, if good things are happening, we take the trade. It's not like trying to front run it and say, well, if I take this trade, the RSI is showing that it could have divergence. Think about what I just said there. It could have, but it's a lagging indicator, whereas this is very real time. It's what's happening in the market at the moment. So it's a little more important, in my opinion, to be doing stuff with tools like this, because your win rate's just going to be better if you're using better tools, in my opinion. I think these are better tools. Doesn't mean that you can't be successful with the other ones. That's not what I'm saying at all. I just think that this is while a little more sophisticated, it does allow for better positions. Like, this is how you find the guys that are like, oh man, how did this guy buy the low? Or how did he sell the top? This is how you find these, through setups, through order flow, right?
Sorry, Struhl. I'll turn my thing off. Is that better?
I want to see Redman that. I do have, so I have one in the group already, Redman, that goes over like how to calculate position size and stuff. And so maybe I'll just release that one. It's older, but it does everything effectively that I need this new video to do. I just make it a public video. It's just a risk management video showing you guys how leverage works and how to calculate position size so that you're not putting too much at risk. That I probably should just take that one and go find the copy of it. I've got it on my computer somewhere, and then just put it out as a public video. That way everybody's got it. And it walks through the manual way of finding position size for you. That way you can say, okay, if I want to risk 3%, this is what my position size would be based on the amount of capital that I have and if I've applied any leverage. And that's the important part, is if you're going to use leverage and you're not doing that, you're signing up for Wrecked City eventually. Max hates leverage. Like, I'm pretty sure he just trades like full Bitcoin positions in spot because he doesn't want to trade with leverage. So for me, I trade leverage and
back it up.
Yeah, the high leverage can be dangerous. So it is one of those things where we try to preach not to use it, even though people are going to do it. You see it all over. But the guys that are doing that long term, they are exercising risk management and calculating those positions. So the formula will be given to you, and then, you know, you can take that and apply it however you want. I would put it in a spreadsheet if I were you, and make it automatic. You can always take an Excel spreadsheet and do that, because I don't know of any position size calculators out there that I'm aware of that are free on the internet. If there were, I would let you know for sure. I'd just point you to that site, but I don't think I do.
I will say this on leverage: it takes one wrong move and you're out. And the people that you see posting like very high percentage win rates probably haven't got that much skin in the game in that trade. You know, you could enter a $1 trade on multiple accounts, 100x, and then one of them's going to be right, and then you've got the percentage to post and brag about and try and get your clout with. So whenever I see someone posting with really high percentage, I know they're doing it for clout. So there's no unless you've got like, you know, 10 Bitcoin, and then you've got one, and you've got all your Bitcoin, and you've got 0.1 on the exchange, and you're 100xing. Okay, maybe. But, you know, how many people are really doing that? People are just chasing clout with leverage, and, you know, and then people that come into the space that don't realize that, then try and use the leverage slider because it's so much fun. Look how much money I've got. Look how much money I can make. But they don't really take into consideration, if you don't hit that stop loss button, you're out. You know, you're out the game. You're gone. That's it. You got to go and tell your wife how you lost the money. So I'm very much against it, and it ruins me when I see people.
Yeah. The other strategy was just brought up by Caro, and I'll make this note before we go. It's not all about R to R all the time, but there are strategies out there where if you're using risk to reward, it is about R to R. There are guys out there that say, okay, I only take trades with a 5-to-1 R to R, and I can only win 23% of my trades, 25% of my trades, and be profitable because the winners that I do have are a 5-to-1 R to R. And if I strictly only lose 1% on all those other trades, it makes up for it over time, as long as I win at least 20%. Right. So, then the math. So the math has to math. Let's just put it that way. That's the easiest way to say it, is if the math isn't correct, you're not going to win in this game. It's like going to a casino. You have to have the edge, and you have to play by those rules that give you a consistent return. But yeah, you are correct. R to R definitely can be. Yeah, high leverage, again, it's it uses, most people doing that are ideally not using very much percentage of their account. Like I trade sometimes on like 22 on my scalp accounts, which I know probably drives max up the wall. But, you know, all those position sizes are calculated. You know, I never ride without a stop loss. That's a bad idea. So it's, yeah, I'm taking trades that I would take on 5x. I'm just using less position size. And I use leverage because I don't like to upload all of my capital to an exchange, mainly because I don't KYC when I go on exchanges. I refuse to do it. So if you require KYC for me to trade there, I won't trade there. And generally they limit what I can take out. They don't limit what you can put on, but they will limit what you can take out of an exchange. So for me, it allows me to keep a lot of my capital, like a lot of my assets, off exchanges, and it allows me to upload a percentage of that onto a risk on platform and exercise a little bit of leverage with it, right? So then I'm not exposing all of my assets to the risk of being on an exchange. I get to keep it in a cold wallet, whatever it is, or I can keep it in cash in a different account, like a traditional banking account that's actually insured. That's what leverage is for. It's there to give you exposure with less of your money. Less of your money is the keywords, you know, like, but that's so hard for people because in crypto, especially, people, you know, like we have a link, don't get me wrong, we have Bybit links, like, but you don't hear us like promoting it or anything like that. It's in the description, right? It's just there. And the reason is because everyone's going to use it. Everyone's going to use an exchange. However,
Go click the link.
Joking. Now don't report the link now. No, but in our field, if you notice, people really promote the shit out of this because they get paid. Like one that drove me insane was, I'm not going to name the name of this guy, but he's huge whale in terms of Bybit. Claims to do more volume than anyone as a team on Bybit, and then tried to say that his link only pays $400 a week. And I can tell you straight away, that is a crock of shit. That guy is making millions off of that link. And that was very disingenuous and a bold-faced lie. is what it is, but like, they don't want you to know that. So when they go there, like Crypto and those guys that got rich, I come from the influencer days of like 2019 and 2020. So I've been doing this a long time, and I was approached by them to start using an affiliate link. And one of the things they were talking about and pushing, the rep was at the time, was that people like Carl and Crypto are clearing $3, $4, $5 million in Bitcoin, Ethereum, and at the time XRP, because those were the only coins you could trade on that platform as it was growing. You could only trade those 3 coins. I think Litecoin was one too. But they were clearing $3, $4 million every quarter in referral fees.
I've got a good one. So do you remember what happened at Christmas last year? Do you remember what happened? It was around Christmas time. And let me get my screen up. Find it. Just to give you an example. So let me hide all of this shit on the charts. Bye-bye. So I remember at 50K, Carl the Moon was saying, and we laughed about this, Magic. I don't know if you can remember, but he was saying, buy everything when it gets above 50K. I'm pretty sure it's 50K. It was in this chart. And and we posted in the group, we're going to short at 50K, because I remember at the time you had a lot of reasons there to short, and you got above there and it just wrecked all you people. Do you think people like that are saying buy up here when the move just looked awful are really, making the money trading? They're not. So they make the money through the links, and they make the money through promoting high leverage. And don't do it, kids.
Well, they were also showing, they would show these positions that they have. And, and this is all stuff I was given secondhand information from that, and like a person that was trying to sell me on being one of these people. They were given vouchers to trade with. So they weren't even trading their own money. So they could show these positions with like 25x leverage. It's like $1 million position. And like, they have no skin in the game. It's just a voucher. Right. But yeah, they were making tons of money. And you got to think, this is when Bitcoin was like 4K, 3K. This is when Ethereum was trading for a couple $100. And all these things went to thousands, went up 22x for Bitcoin, went up, who knows even what on Ethereum. Off the top of my head, I'm not going to do the math, but it's significant, right? So yeah, but that it is what it is. So when people tell you they're not making money on these things, I can tell you for a fact, I trade underneath my own link. That's one thing that I do, is I trade under my own link, because I want to get some of my fees back, and I make more than that $400 a week off of just my account. So, and I'm not an entire group. So when people are telling you that they're not making money on these, like, and shilling them, they might not be leading you to slaughter like some of these other guys. Like Crypto definitely does it. And that's not to be rude. These guys shill high leverage exchange and then give really spotty signals and have you buying tops and selling bottoms pretty frequently with liquidations involved. So they are making more money that way. So it is what it is. Just be careful if you go on these exchanges. They can literally ruin someone's life.
Link in the description.
Link in the description. Go YOLO your life.
Link in the description.
I can tell you guys that when I started trading, obviously nobody just starts trading and is profitable right away. I lost 60% of all of my capital. When I say that, that's my net worth. That includes, what I owned in like other assets. I blew 60% of it in less than 2 months on Kraken with 5x leverage. Yep. So it can be very, very bad for you if you get involved in trading and you're confident and then you bring leverage into it. You have to be consistent over time. That's the key, is just consistent wins over time. I took that trade just now. I took a little bit of a win there.
Yeah, it's going to go
I'm good.
up, it looks like.
Yeah, that's what I was after. I closed a little bit early, but just a day trade for now, but you guys have to be consistent, have to have some kind of a program. And when I say that, I mean, it's your own program. And so what I mean by that is it's to say that you can standardize everyone's trading style and make it, that if someone comes in here, they're all going to trade the same and they're all going to take the same trades and we're all going to win. That's a really bold statement, I think, because not everyone shares the same risk management. Not everyone shares the same ability and time to take all the trades. And that's a big one. Most people don't think about it when we say, okay, this trade setup hits 80% of the time. That also implies that you're able to take every single trade inside of that collection of data if you're going to get an 80% win rate. Because otherwise, just like being at a casino, you might have a roulette strategy that hits, 62% of the time or something, but you get a string of like 10 losses in a row because you weren't on that table all day. There's going to be times where those numbers are going to be skewed the opposite direction. And you have to be able to withstand, multiple losses in a row. And if you can't withstand multiple losses in a row or a string of losses, like 5 trades, 6 trades, I know some people have lost 10 trades in a row. And if that wrecks you, you're doing something wrong. You have to be able to withstand that because it is going to eventually happen. You're going to lose more than you're going to win for a little bit. And if you're not doing things correctly, that can like knock you out. Whereas I know guys that win, like there's a guy on the leaderboards in some of these trading sites. And I looked and the guy wins 80% of his trades and he's negative 52% for the month, but he's got an 82% win rate. Think about what I just said. He's winning 80+% of his trades, and he's negative 50% on the month. Like, what the fuck?
Must have a huge stop loss. That stop loss is so far away. His stop loss is so
I don't even know who Sheldino is. And I'm not trying to throw shade at anyone else on this thing. I just think that there's a lot of misinformation in the space that goes out there. Some of these guys have really great information to share as well. Like it's just one of those things where I would definitely just be careful when you're going on there. We all use it. When people say, hey, what exchange do you use? We say Bybit because it's really secure. And 2, it's just been always reliable. Like it doesn't go down. That's my big thing is like, I've been trading on Bybit since 2019 in the fall. I switched over and I cannot think of a time where we had a big problem where I couldn't get in and like access my account.
And it's been the one in the 2 years that I've been trading on it, and the price had a huge wick. And what did they do? Everyone that was liquidated, they gave them.
They rolled it back. That's right. They rolled it back. I remember that. It was Ethereum, wasn't it?
I think it was on Bitcoin. It was at 52, I think 52K.
Could have been. Yeah.
A while ago. Happened once. But I got wrecked on Binance, which made me swap over. Is because they just turned it off. And I just couldn't access my charts. And I was like, the fuck is this? So.
I don't know who Dino is. Sheldino, Sniper School. Yeah, I have no idea. Maybe like why so and so send out.
Yeah, with a voucher. Still got something back. Can just
that's better than most. Most people, like if that were Binance, they'd tell you just fucking tough cookies, man. That's 100% true. They would just tell you to suck it up. They'd be like, all right, well, that sucks for you. Crypto banter with Rand and Kyle Dupes. Never heard of. So I believe it or not, Stack, I don't watch almost any of these guys. It doesn't do me any good.
I've literally never heard of these people.
Yeah, Crypto Banter, I only know of him because Paul mentioned it to me one time. He mentioned Banter, and there's so many people in the crypto space that I don't know about, and some of these guys have like hundreds of thousands of followers. And I've been in the space for over 2 cycles at this point, and I still don't. Don't know.
You are a guy on the internet. I don't know how you've not.
I am a guy on the internet, but like when I'm not a guy on the internet, I'm a guy in real life too.
What?
Like I have kids, guys. Like I got a busy weekend. Like you guys saw my weekend. I got Girl Scout cookies tomorrow. I got a kid's birthday party tomorrow. My daughter's dancing at the halftime of the basketball game. And then on Sunday, we got more Girl Scout cookies to sell. We're gonna go set up shop. Like I got stuff to do. I don't sit around and watch these guys.
Shop, yeah. Good, my shebang. You built a store.
She sells some cookies, bro. She sells some cookies. She was the top salesperson last year. We're gonna try to get more this year. Yeah.
An extra $1 on me. Like, yeah, these are 2 for you.
So if anybody wants any Girl Scout cookies, I will mail them to you. You just let me know. We accept Bitcoin. No, I'm kidding.
Yeah, it'd be great. That would be great. You should so do that. You should have a thing where you can scan it with just one of your other accounts and say, look, send Bitcoin to this account and we'll accept it.
Selling for Bitcoin.
It's a selling point. It's a selling point. Just have a printout of your deposit thing. Someone will tap in like, yeah, I've got it.
Alado, we do know who that is. Yes, we know who Dan is. Everyone's aware of who Dan is. Caramel Delight. Ooh, I'm a thin mint. I'm like basic. I like the thin mints. You got to put them in the freezer.
These are American things. You guys make the sweets.
How do you think we get the diabetes, bro?
Of course. How do I think you guys are known as the fattest country in the world?
Because Australia hasn't caught us yet.
All right, they're catchy.
Dude, I tell you, I watched TikTok. My TikTok's primarily food based.
Yeah.
There was one where there's this British guy that tries foods that people tell him to, and it was like he tries a peanut butter and jelly sandwich, and he'd never had one before. You guys don't eat peanut butter and jelly sandwiches? Dude, I'll send it. He loved it, dude. He said it was like the greatest thing he's had. How have I not had this my whole life?
What do you say? You're going to send it me? Is it not a sandwich?
No. I'll send you the video. That way you got proof.
Right. I mean, it doesn't sound too appetizing for me. It just sounds like two opposites. And the thing is, you guys call jelly. So you guys call jam jelly. It's not jelly. That's jam.
A lot jelly wants to know jelly. Do we think Daniel has good TA? I'm going to bridge this subject. That's fine. I don't care. I think that Dan is very good at what he does. I don't think that his videos that he puts out are overly informative. And he does that on purpose. He is gatekeeping pretty hard. But it is one of those things where like we go through some pretty in-depth stuff with you guys, and it's really hard to learn this in one shot. It takes time and it takes practice. You're not going to watch one YouTube video and get good at it. So when I look at Dan's TA that's public, I honestly wouldn't waste my time watching it personally. I don't think it's good. I think that he masks his trades in terms of like what he's actually looking for the public. And he's just looking to recruit for his group. He's not actually giving you guys anything that's valuable in those. If you want to know what I think. Now, in real life, do I think he's a good trader? Yeah, he's really good. He's very good. Now, a lot of the TA that he's got is very, very available out there, and he did not make it up. It's not stuff that they created. It's stuff that they took from like Johannes Forthman in a book that we offer. It's from a textbook called Market Profile, Volume Profile, Order Flow Next Generation. This is the source of almost all of it right there. You can get that stuff. Same with like when he talks about like, he made a public stream one time saying anyone using Fibonacci time learned it from me. That is a crock of shit. I have the book that goes over how to do Fibonacci time in our Discord. Like these are all things that can be learned, and they can be learned through books. These aren't things that were just invented, So like that's the only time I ever have a gripe with it, is that he tries to make himself seem more that he is like this revolutionary trader in the space. And I think he's been very successful, and he's an excellent marketer. And I can't take anything away from him in that regard. But, the guy is building an absolute empire there.
I want to bridge the gap on what jelly and jam is. This is jelly. It's not peanut butter jam. It's peanut butter jelly. You do not put that in it. You put in this in it.
Yeah, jelly and jam are different. They are different. You got to do peanut butter and jelly, not jam. That's not jelly. That's fucking Jello. Jello.
That's jelly. Look at the Y on the end. Where's the O? It says jelly.
That's based on your internet. No, you got to get Concord Grape Jelly by Welch's or Smucker's, and you just throw that on a piece of bread with some peanut butter and enjoy. Eric Crown is another one. So I actually have been watching him since I started trading. All the way back in like 2018. So I've seen his channel go from like literally 2,000 to 4,000 subscribers to where it is now. His TA has changed a lot. So he's good though. He's pretty good. I enjoy his content. He definitely is good for a laugh. I don't watch it all the time because he's a momentum trader. He's a momentum trader, and I don't trade momentum, obviously. But he's got systems that work for him, so I do think it's useful. But his system generally doesn't call the top or bottom, and you'll hear him say this multiple times throughout the year. He's not very, he's like, there's going to be times where I'm going to miss the highs and the lows. He goes, but I'm going to catch the in between. So like he's pretty good at that stuff. But yeah, he's very knowledgeable. I do like him quite a bit. Yeah, that's Jello. Thank you, Stat Crypto. Yeah, that's definitely Jello.
This
He
goes
goes,
back
look up
to how
Schmuckers.
this goes back to how you've taken our language and butchered it. You've simplified it, made it for monks, and then that's what you use. It's like that pavement word you made up.
Just say you just throw in and you make it for Mungs
Sorry,
because you want to
sidewalk word you made up. It's pavement. It's not sidewalk. It's a pavement. It's on the side of the road. Oh, it's a sidewalk. I loved that thing where I can't remember Michael McIntyre where he ridiculed you for it. He's like, they must have just get ran over all the time because they had to know walk on the side.
It is a problem.
Sidewalk.
Here.
Pavement, mate.
Everyone also has guns, and
That is jelly.
Shootings happen every day.
It's because you think jelly's the wrong thing,
dude. If you came, you guys are actually known for having terrible food. You know that, right? Like British food is known for being fucking awful.
Yes, we do have rubbish food. But you know what? You also think we have worse teeth. And if you actually Google who has worse teeth, the British or Americans, you guys are the worst. So
it's probably because our healthcare system's trash, but no, because people can't afford insurance. But in terms of food, I'm telling you right now, you ever come to America, you're not going to want to leave.
Fat,
you're going to get fat. You're going to get diabetes. You're going to start
watching. Time to bulk in my life.
Yeah, you'll love it, dude. You will love it. But gold bars are just street pavers. You liked Crown more 2 years ago. He was a little bit. He did more live streams. I think years ago he would go live and he would interact with the chat more. He was more entertainer based at that time. I'm not saying he wasn't still a great TA, but he did a lot more entertaining, which I thought was pretty cool. And he is funny. He's genuinely funny. So come get Tex-Mex.
Food is British food with flavor. What does that even mean? It's got salt and pepper on.
I think he's referring to New Zealand. Isn't that what they refer to Kiwis? Kiwis in New Zealand? Gotta be them.
You must have sent all the good cooks when we populated you.
What's that?
I said we must have sent all the good cooks when we populated them.
Yeah. Food out in America is kind of diverse. I don't know if you've ever had food, like Midwestern food, I think.
No, I've never had food, mate.
No, I mean like food like this, like Midwestern food.
What is that considered? What are you calling that? Barbecue?
Well, we are actually considered maybe the best place to get barbecue in the country. But
and where did you get that from? The Germans.
What?
You got the barbecue from the Germans, mate.
We got a lot of stuff. Yeah, I'm not going to make that joke. I'm not going to make that joke. But in terms of not necessarily barbecue, but things like chicken fried steak, chicken fried chicken, mashed potatoes and gravy, corn, stuff like that. Texas barbecue is okay.
Hang on. Did you just say you guys have made?
It's made a specific way.
Mashed potatoes and gravy.
No, that's just the type of food we eat more of. Like that.
Yeah, that's English, mate. Bangers and mash every day.
You guys fucking make the worst that shit. Though. Oh, it's awful though.
Oh, sorry, it's not got a whole slab of butter in there. God.
You should be sorry. It's meant to taste good.
You can taste that good all the way to the hospital.
Poutine. I've never had poutine.
Me neither.
I've heard things about it. There are people out there that rave about it, though.
Yeah. I mean, yeah, Texas barbecue. Yeah, well known. Great sauce. Solid stuff. Anyway, I'm going to a Thai for dinner. I would like to call this stream an end. I need to walk my dog.
Yeah, you're going Thai food there?
Yeah, I'm going to a Thai.
What's our concurrent viewer record right now? Do you remember?
It was 44 the other day. What are we on now? I'm on this bootstrap fucking
42. 42, and all we're doing is talking about food.
We're doing the wrong game, mate.
Yeah,
changing it. Leading food.
All right, guys. Well, I'm going to hop off with Maxwell. I know I'm getting hungry too. But thanks for watching, guys. All 42 of you guys that are in here. Do us a favor. If you appreciate it, hit the like button. Otherwise, we'll catch you guys. Actually, I'll be live tonight. I'm going to do an altcoin live stream. So I'll see you guys later this evening. I'll put the link out on Twitter, and we can chat shit about some altcoins.
I completely misheard you then when you said altcoin. I thought you said adult porn live stream. I was like, what?
No, definitely not that. Yeah. No, I will have a shirt on, guys.
Altcoin.
I'll have a shirt on. So, yeah. We'll see you guys
Brilliant.
later.